It is very important to understand this demand zone formation and supply zone formation to the each and every trader. I'll give you the simplified into to how demand and supply zone. So demand is actually created by the buyers where the support area is formed, and supply zone is created where the sellers are very high and the resistant area is formed on that area. So it is created by the sellers, is created by the supply zone. So technical analysis and price action is a recent price of the price to understand in near future of that price. So it is all about the how the demand and supply shifts, the greater the response of that price will be the strong. So in the next video, I'll discuss about how this illustration is formed. So demand zone is formed between the two highs. Okay, the low between the two highs is called as demand zone. So in this area, the demand is created. Okay, now whenever the price comes to this area, the demand is very high, so the buyers will push that area, push that price to the next level. So you have to be very stringent, and whenever you're taking the entry, you have to be super fast and you have to take this entry. There are certain guidelines on the demand zone. Okay, the demand zone will be formed in between two highs. Second high must be higher than the first, so the demand zone is very strong. We can extend this zone horizontal to project next possible significant, and price will be the result of momentum down to the supply curve. Let us understand how the supply zone is formed. In this illustration, the supply zone is formed between the two lows. The high between the two lows is created at a supply zone. Okay, and whenever the price comes to that high area, the resistance is very strong, so there the supply zone is very high. So whenever that price comes to that zone, the sellers push that price to down. Okay, the you have to take a very stringent action whenever you're taking supply and zone demand trades, and there are certain guidelines which you have to follow in supply zone also. Supply zone is formed in the high between the two lows, and second low must be lower than the first one of the demand zone to be strong, and we can extend the zone horizontal to project next possible significant, and price will be the result of the moment to download the demand curve. So in summary, I'll give you the demand zone happens in the low between two highs, where second high is higher than the first one, and supply zone is happen in the high between two lows, where second low is lower than the first one. I hope you had a clear idea how this demand zone is created. Now we have understand about the risk management. The risk management should be 1:3. That is a minimum you have to carry forward in the supply zone and demand zone trades. The entry where you're taking is the lesser, you get a very smaller stop loss, and you can take a profit on the 1:3. So I have shown you clearly in this illustration where naturally small logical stop loss allows you to be a 1:3 or 1:4 of risk reward ratio in your trades. And supply and demand zone, once you clearly understand the supply and demand zone, so you no need to depend on the indicators of lagging indicators which you follow. So you have to be very perfect when you're drawing a supply and demand zone. Now we'll understand the risk management on supply and demand zone. It takes 3 bad trades to wipe out one good trade, so 70% of your margin of error. In 1:4, it takes 4 bad trades to wipe out your total 80% of your margin error. So you have a very proper good risk management you have to maintain. Now let us understand the practical example on the charts. Okay, in this area, you check it out. There is a proper bullish trend on this chart. You will be finding the first high, you have a second high, and the second high is much higher than the first high. So in between that highs, there is a small low. Okay, that low is a demand zone. Now many people has in confusion. Okay, there's only one candle. You will be finding one candle, you will two candle or three candles. So you just have to wait for a formation of the demand zone. So you mark a low of that lowest candle of that. Okay, the lowest wick of that candle. Now you have to understand where you have to mark the high of that candle. Either you will be finding first high candle or second high candle or the second opening candle. Okay, so the second opening candle in this chart, there is a Marabuza candle. So there is a strong bull area. Okay, now I'll draw one open line there. Okay, now this area is created as a demand zone. Now I just have to wait patiently. When the price comes to my zone, you have to take the entry. So now you'll wait patiently. to come the price to the demand zone. Once the price comes to the demand zone, I'll immediately make an entry. Now check it out. The price came to my zone. Okay. In this candle, there are two confirmation. One is it's a bullish candle. Second is there's a strong rejection in the bottom. So there's a demand is very strong. So the buyers are putting pressure to keep the market uptrend. After this candle, immediately you can take the entry with the risk management. Okay. In this scenario, you will check it out. The risk is very small because on the bottom there is a strong support is there. So there is a high possibility that stop loss on that area is very small. This is how you have to identify the zones. And zones plays a most important vital role in the charts. Now check it out. I'll take 1:3 as per risk management. Okay, my risk is just 10 rupees and I'm expecting a profit of 30 rupees. Now you check it out. Once the market starts from there, how the market goes on. 1 second. Okay, see, my risk is very small in that, and reward I'm expecting very high because it is in a bullish trend. So demand is there in that area. So I'll put my order there. Once came down, it's playing around. Now the market has achieved my target. So this is how you have to maintain the risk and reward in demand zone. Let us understand supply zone. In this zone, the chart is showing as an the bearish trend. One is you have first low and you have a second low. The low, the two lows, there is a high between the two lows. The first low is much higher, lower than the second low. So in that area, you will be finding the supply zone. Supply zone means there is a resistance because the sellers has put pressure to keep that price down. Now what you will do is you will mark the high of that upper candle. So in this area, you check it out. There are three candles. In previous chart, there is only one candle. So in this chart, there is a two candles are there. Now you will just wait to the second or third candle where the pressure is very high, and you will put the one horizontal line on the opening of that high pressure line. Let it be a Marabuzo candle or very strong sellers of candle. So mainly Marabuzo is a very strong direction candle. So I will keep the horizontal line on the opening of that line, opening of that candle. So now I'll put one horizontal line. Okay, and that area will be created as a resistant area. So now I have formed a resistant area, that is supply zone. My supply zone is there. Now I have to keep patience and I have to wait to price come to my area. So sometimes people get confused. Okay, there are 2 3 highs, I should wait or not? No, you are supposed to wait because market gives the money only to the patience people. So now I just have to wait for the resistant area where the price comes. So now the price is moving up. Now it had touched the resistant area, that is the supply zone. Now I got a two clear confirmation. One is the candle. There's a strong rejection candle on that area because sellers are very active. So these sellers are ready to put the money and pressure down that stock. So they immediately I can take the entry, and with the confirmation that there's a stop loss is very less for me because the market has showing a very clear rejection on the supply zone. So I'll take the entry immediately after the candle close. Okay, now my stop area is very less. Now you check it out in this formation, people get a lot of confusion. Okay, there's a W pattern, market will go up. Yes, there's a possibility of going up. It's all about the speculating the market on the technical ground and what exactly the area of rejection is there on that form. So many people has double top, double bottom confirmation and all that, and they'll take the buying area, but immediately when it goes, there's a supply zone. Now here I'll take the proper immediate supply zone and stop loss I'll put, and I'll wait for a target of 1:3. This is how you have to do a trade. Whenever if this zone strategy fails, your stop loss is very less. Okay, but your profit taking is very high. So as I told you, there are 1:3 ratios. So once you get a profit, you can take the risk of next two options are there. So you have two trades options. Take the trades on that one. Major advantages of supply in demand zone. So it is based on a solid economic principles, okay, and there is no zero lagging indicators actually, because you don't follow any indicators, so there's no lacking in this strategy. You just have to understand in a proper way where demand and supply is there and how I have to trade in these zones. So very importantly, I have given you clear cut information in a simplified version. Hope you liked it. So we'll see you in the next video. Thank you very much. Bye bye.